how are you handling these type of conditions for valuation purposes, for required minimum distributions, etc.?
Yeah. I always say for most investors, as long as it's just a market value. But for the RMD investors, it does matter because it affects their taxes now. The valuation that they have now, basically determines how much money I have to pull out this year. But yeah, it's tough. I mean, we always say it's not an exact science, especially with private assets. Most sponsors, if the investor puts in 100,000, it's $100,000 investment for 4 years of a 5-year investment. Like then that fifth year, we're like, oh, okay, here we know exactly what it's worth. That's pretty common. Um,
But what if
but
the
as you
investment
mentioned,
is not going well? Just an
yeah,
example, they put some money into multifamily and that asset class is distressed. It's worth somewhat less, if not a lot less. That's the complexity, just as an example.
yeah, yeah. I mean, we don't dig into them too much on there, but we would like to see a fairly accurate, you know, judge of market value at that time. And for that investor, it actually is beneficial to them to have that lower one. The issue I've always seen is there's kind of competing, like for your investor who has an RMD or wants to do a Roth conversion, they like that valuation be a little bit lower at the end of the year. As long as the deal horizon is going to be good, long term, they kind of like that idea. But your investors who are not doing RMDs or are not doing Roth conversions want to see a pretty good valuation. So there's kind of conflicting stuff there. I mean, we like to think that there's the most accurate, but yeah, we do valuations for 50,000 different groups. We're not digging into them too much. um, you know but yeah, ideally factoring in all those things would give you the correct valuation. Factoring in tough markets, illiquidity, different things would arrive with the correct valuation. Like I said, for most investors, it doesn't change anything. It's just a different number we'll put on the statement. But for the RMD investor or investor who has taken RMD, it does make a difference on what they'll have to pull out at the end of the year.
I'd be really curious to know how many people are actually doing a Roth conversion this year
Yeah,
versus last year.
yeah. We'll see. I don't. Obviously, we'll see at the end of this month, kind of what that looks like. Um, every year, some people do it. So I'm sure those people who do it every single year will be the same. But I could see if valuations are down a little bit for whatever reason, we might see more Roth conversions for sure.
Is there like a checklist for someone who is looking to do a Roth conversion, so that they can think about it for either this year or next year?
Chat GPT it. Uh, so I don't have a checklist at all, but yeah, a good thing to consider. Like I said, the first thing is always long term. Do I think my taxes will be up or not? So that would be kind of the thing to look at. If I have cash, it's a really easy conversion. So if you have cash already in an account, I want to convert that amount of cash to my Roth. That's really easy. It's done. But you can convert existing assets too. So if I'm invested into a multifamily deal and I want to move that deal into my Roth account, that can be done as well. It takes a little bit longer. So that's one thing I would say is if you have existing deals that you want to move over, that involves sometimes a new documentation being done. So it takes a little bit longer. But yeah, it's really as simple as just talking to your custodian about, okay, what form do I need to fill out? If it's cash, that's really all it is. It's just, I have a Roth account. I fill out a form. We move money from traditional IRA to Roth IRA at that point. So it is a pretty simple process. If it's an existing asset, a little bit longer because there's normally some kind of other documentation to show a change of ownership from traditional IRA to Roth. This time of year is really nice because you can get the valuation of an existing asset to know what we need to convert. And you can convert some in 2025 and some in 2026, split up that tax bill over 2 years and convert a larger sum and not have to bother anyone about fair market value reporting or valuations twice. So you can actually just bother them one time and do two conversions and kind of get that out of the way too. So that's always a strategy I do like, especially if you kind of know what you're going to make and you're trying to max out your tax bracket. You can max out this year, and if you think next year is going to be very similar, you can max it out for next year as well.